Hello, it's Geek Austin, founder, CEO of Dakota, and I want to talk about Rainmaker Live. It's a show that we go through everything that we've learned over the course of our lifetime, really, in sales and fundraising, and we share that. Think of it as best ideas, but there's a lot of myths out there that we basically unbundle, if you will. We demystify the things that you should be doing, we all should be doing to get leverage, and that's the theme. The theme is all about leverage. What can a salesperson do to get leverage? And there's a few key points that we're going to go through that are really game-changing. So you don't want to miss it. Please register below. Join us for another Rainmaker Live. You don't want to miss this episode. Do you know how hard it is to find a job in this industry and to find talent? It's not easy because places like LinkedIn and Indeed, they're just too general. No one's ever had an industry vertical job board like we have for the investment management industry across all job titles. That is Dakota Talent. Of course, we're focused on sales, marketing, distribution, but if you want a job as an analyst at a private credit firm, private equity, you can post a job here. If you want an internship, if you want a job first year out of college, you can all post here. You can even create premier listings within Dakota Talent. So we just wanted to welcome you. As you probably know, if this is your first time to Dakota, we're a fundraising organization. We've been raising money since 2006. We've raised over $25 billion. We know the industry. We've also created an industry-leading database of over 1,000 firms and 4,000 fundraisers that use our data to do cold outreach. So we've created this really wonderful community, and we're bringing the community together to be matchmakers, to bring job seekers, opportunities, as well as employers who want talent. So please use the job board. It's really fantastic. It's easy to use. It's very easy to post a job, post a premier listing, and also to create a profile for yourself and post a resume. So have fun, enjoy Dakota Talent. What's up, everybody? Geek Austin, founder and CEO of Dakota. Welcome to our 19th episode of the Emerging Manager Growth Show. I'm joined by our president, Dan DiDomenico. Dan, welcome.
Thanks, Geek. Pleasure to be here.
Oh, thrilled to have you. So I think, as you know, our firm was founded in 2006. Dan's been with us as our president since 2008, and we're professional fundraisers. And we've raised over $25 billion since our founding. And one question, Dan, we always get, emerging managers call us and say, hey, I need some advice around fundraising. And so we do this show to demystify and give guidance to emerging managers who really, at the end of the day, the theme is they have to do less with more is the ultimate goal, right?
Do more with less.
Yes, do more with less. Yep. Sorry, exactly. We need to do more with less. And when you think about how we've constructed the show, if you go back in time and look at the first 18 episodes, you can see sometimes we have focused on RAs and RAs that use emerging managers, which are an unbelievable channel. We look at consultants, we look at public pension funds. Yep. Today, we're going to look at family offices.
Which is another great channel for emerging managers. I mean, we have such a warm spot in our hearts for emerging managers because we've helped fundraise for those emerging managers. So we understand the landscape, where it is you should be bringing your investment strategy, the reasons why, and the family office channel is a key market for emerging managers.
Yes. And so we're going to dig into the family offices. And Dan, let's just talk about, one thing, just so you all know from an emerging manager perspective. I can tell you a little story. I'm not going to say the name, but as you know, we have Dakota Marketplace, our database. And we got a text the other day from a firm that when they were started using Dakota Marketplace, they were 200 million. Well, a year later, they've grown from 200 million to $1 billion.
Wow.
And they've done over 200 meetings with their portfolio manager. Now, what they said is they spent 3 hours a day inside Dakota Marketplace, reaching out and booking meetings. And Dan, maybe we can talk a little bit about the linchpin that I think a lot of people don't always buy into, and that's called cold outreach.
Yeah.
So doing cold outreach. And for us, it's not 99.9%, it's 100% a must. Can you just talk about that a little bit?
Our lifeline, the life of our business, is all predicated on activity. I mean, that is what we can control. We can control who we're calling on. We can control the reasons why we're calling on them, just trying to generate the type of activity to drive the top of the sales funnel. That's all activity based, right? And that's all about getting in front of qualified allocators to our investment strategies. And look, you can spend so much of your time attempting to qualify these targets. This is the massive efficiency that we believe that we bring, the value that we bring to especially these emerging managers, as we talked about in the onset, doing more with less, and giving you that head start and having the right levels of data to call on the right people to generate that kind of activity.
So as for an emerging manager, the good news, bad news is cold outreach has to be your best friend.
It's a must.
You have to be sending cold emails, introducing yourself and your firm. We'll talk about how you construct that email a little bit later in the show. But as you're thinking about this, right, cold outreach is the name of the game. You can't get around it. You can't wait for the phone to ring. You can't wait just for referrals. Yeah. And every single day that you aren't doing cold outreach, you're falling behind. So as we give you some sort of tips and tricks, cold outreach is the name of the game. Yeah. And Dan, talk a little bit about allocations for us with all of our emerging managers over the past year, meaning is money in motion so people can at least get a sense of what is going on.
Yeah, 100%. Yeah, and I think that as we look at the key trends right now, we are seeing a big uptick in searches on the institutional side as well as in the wealth intermediary channels. We just went through a very disrupted period in terms of performance, a lot of volatility. And so this is a period in time where those allocators are reassessing how did their managers perform. And out of that reevaluation comes opportunity. So for those that have been active over the last few years, engaging in conversation, I'm sure you're seeing the same thing. We're seeing those conversations, those evaluations now translating into opportunities, searches, and now decisions being made. So we are 100% seeing allocations being made either on the public equity long-only side, as well as on the private fund side. Certainly on the private fund side, that's been a massive, massive trend that we've seen, especially in private credit. So we are seeing those allocations being made. So money is absolutely in motion, Gabe.
Got it. So let's just tie this together, right? Cold outreach, we gave you the example of the firm that went from $200 million to $1 billion using Dakota Marketplace, setting up all the meetings. Yep. There's money in motion. We're seeing it. Yep. We're seeing it anecdotally with firms that use Dakota Marketplace. We're seeing it in our own book of business.
We are.
The point is, this is a very, very hard business, right?
Yeah.
It's a very, very hard business. So we're not telling you this is going to be easy, but we are telling you if you do the cold outreach, if you use the right emails, you can get results. That's really the key takeaway.
Just being persistent and consistent in the marketplace, right? We can never be market timers.
No.
We're never going to figure out what's that inflection point to when decisions are going to be made. That's when I'm going to start marketing.
Yeah.
You have to be consistent in your marketing efforts over time with your existing relationships. But to Guy's point, you have to focus on the new. You have to be making those cold outreaches. You have to have that top of the funnel full,
right?
Because when those decisions start to be made, you never quite know where that's going to come from. So having more of those conversations active, the better.
Right. So perfect segue into family offices. So the key thing here, with the reason we're highlighting family offices or RAs or consultants or public pension funds, because we're trying to steer you in the direction of these pools of capital that are willing and want to look and source new investment ideas. Clearly, if you're an emerging manager, there's a good chance you're either new, you've just been in a spin out, and they're looking for those early opportunities. So Dan, why don't you just give us the characteristics of the family office?
Well, it's a fascinating channel, right? There are so many family offices, not only here in the US, but internationally as well, that can be transformative for an emerging manager, for a business just getting started. They're so nuanced. They're so willing to think about creative ways to invest. And I think that's what the most attractive part of this end market is, the fact that they're independent. They are thinking about different ways to create either alpha or think about different ways of creating uncorrelated returns for the families that they serve. It is very fragmented.
Right.
I think that's, again, where we would lean and encourage you very much so to learn as much as you can on the front end about these family offices before making the calls. That's the power of Marketplace and everything that we're providing as intel on the front end before making these calls into the family offices, trying to understand how do they create that generational wealth and where can you potentially be a complement to their existing portfolio. Even though they are fragmented, though, Guy, one thing I will say about the family offices, which we find to be incredibly helpful. It's very referral based. There's a lot of collaboration within these family offices amongst themselves as peer groups that they create.
Right.
So there are points of leverage as you get involved in conversations with family offices. That's the key though. You have to start. You have to start to engage. You have to start having these types of conversations. You're not always quite sure where it's going to lead. It may not even be an investment from that one family office, but in conversation with their peers, they might make an introduction for you or point that other family office in your direction. They host a lot of various peer events. And so offering up where you could potentially be a source of information, something educational, something thematic. They are big thematic investors in the family office channel. So where you could offer up something that may be very timely as far as an investment that's connecting to some of the major themes that are unfolding out there, they'll take you up on that opportunity to sit in and get exposure to a number of different family offices that may create that peer group. I would also say the more that you can be engaged, the more you can reference what other family offices are doing. They want to know what their peers are doing out there in the industry. So where they are very fragmented, where they are very independent, where they are very nuanced, there's no one single family office that's going to look like the other. Their conversations certainly rhyme. So if you can figure out what's topical, what's of interest, those types of trends, they have a tendency to move through these family offices because of that high level of collaboration that they share.
And Dan, what was topical in 2023?
As you would imagine, these are massive, in many cases, taxable families. Right. So anything that would be considered tax-friendly income is certainly an area that seems to be consistent as a way to engage in conversation with these family offices. Many of these family offices have direct exposures either through companies, through private equity, either direct through real estate that they've accumulated over the years. So not a surprise, but real estate credit might be an area that might be of interest to complement their equity exposure that they have across various individual direct exposures to buildings or apartment buildings, whatever that may be. Secondaries was very big. And I would think that's going to continue.
Right.
Especially for others that are looking for liquidity. You're not seeing as many exits and deal flow right now. So the secondaries market could be a fairly interesting spot and I know of interest for family offices. Again, this sort of fits in with the taxable nature of the underlying assets, but muni bonds, high yield muni bonds, ladders, individual deals on the loan side that could provide for more tax advantaged income. Co-investment. This is an area that family offices are always intrigued by, where you can be a partner for them. They may be an LP investor, but they love the collaboration that you can bring to the table. So something that may be of interest where you can engage in that conversation where they can add more of an investment through a co-investment. So you're acting as that sourcer of deal flow for them. So that level of conversation is of interest to this channel.
Gotcha. And then, as you were just saying, the trends that we're seeing on opportunities in 2024?
Yeah, so again, it's a continuation of what we saw last year. Tax-friendly income, secondaries, co-investments. We just had a conversation on one of our more recent Dakota Live podcasts, which we've been getting such a great diverse set of allocators. More recently, it was the Gilder Family Office for growth. Yeah. And this is another trend that we're seeing where you have a family office that's built out all the capabilities, all the resources for not only tracking their existing investments, but the sourcing capabilities that they have now developed. They've got a strong muscle in finding new opportunities. How can they share those opportunities, right? Is there a way for them to expand their business? Gilder Family Office inviting other families into investments that they're sourcing and due diligencing. So we're starting to see that transition from family office to OCIO in a way for other family offices where they can leverage their capabilities, to then even developing into multifamily offices where they can be a shared resource to other families on a select basis.
Right. And Dakota Marketplace is chock full of a complete list of family offices in both the U.S. and internationally. So if you cover the international markets, UK and across all the different international markets, we're very, very deep within family offices. And over the past 3 years, we've gone very, very deep in Dakota Marketplace. So We have a great, rich resource we're going to highlight. Dan, why don't you highlight about 8 to 10 sort of unique family offices?
Yeah, and I call these out for emerging managers because this is where we were saying, right, this is a great, fascinating channel where you could potentially be creative with them. Can you provide them access to the strategy at some sort of preferred economics for those early seed or just early assets to get the strategy to points of scale? Can you provide a stake in the GP, a percentage of revenue share for future growth? And again, this is revenue or performance they can help to generate that is very unique, has very differentiated. So the more creative that you can think and engage in these conversations, the better. PSP Partners, which is the Pritzker family office in Chicago. Longview, which is the Crown family in Chicago. Chicago is a big area for family offices and one that's highly collaborative in terms of their groupthink and some of the peer groups that they've created for collaboration. Olympus Ventures was the Best Buy family in Minneapolis. Moose Partners was the Chanel family in New York. So you got also understanding how did they create that wealth and maybe bring it to them something that's going to be highly, highly complementary to the existing assets that they have at the family office and for the underlying family assets. The Willett Advisors was the Bloomberg family in New York. The Observatory, which is the Glacier family, which makes up the Vitamin Water, Smart Water in New York City. So all of them has fascinating stories as well. I mean, that's part of the joy that we get out of these conversations, understanding how did that family come to be and what that generational wealth path and where are they in that cycle to understand where you could potentially help and where they can generate what they believe to be really nuanced, really boutique, really specialized investment strategies to bring into their program.
Great. So, Dan, as we move on, because I know we're going to get into best ideas and concluding remarks, we are going to look at another way to get exposure for your firm, your investment strategy as an emerging manager, are conferences. Yeah. And as you can see, we have some upcoming conferences. Probably the number one that's coming up on April 16th is the McGuire Woods. That's absolutely one that gets some of the highest ratings for emerging managers. And you can see there's some in Europe. These are all, by the way, in Dakota Marketplace. So with that, I'm going to go on to fundraising best ideas. I'm just going to dig in because really what you need is you need to find a point of leverage. I'm going to go through 3 areas where you can get tremendous leverage. The first is the power of a CRM. If you simply can get the meetings that you've scheduled into your CRM, you can run past activity reports that'll trigger sales ideas. And then you can also build pipeline reports. But the key thing is using a CRM, because if you're going to do all this work, you're going to go set up all these meetings, you're going to do your cold outreach, you need a place to house all this so you can rapidly retrieve it. So CRM is mandatory as an emerging manager. You need that leverage point. The second is creating alignment. Now, what's going to be very important for you as a fundraiser, and Dan, we talk about this all the time with our partners, is making sure that you have a clear plan of attack, it's written down, then there's a clear plan to report back against that plan to your higher-ups, if you will. Part of the deal here, Dan, is we've always said this, it's Dan DiDomenico Inc., it's Guy Costin Inc. in terms of a salesperson. So you have to act like a big company, meaning you want to use a CRM, you want to have a sales plan, you want to report against the sales plan. Just because you're small, you might be an emerging manager, you might be a single person salesperson, you still need to act like a big business, a big company with all the proper procedures. So creating alignment with senior management, making sure they know what the sales plan is, you're reporting against the plan, so you never get out of alignment.
Set expectations.
Yep.
Right.
And lastly, once you get in to do the meetings, Dan, we always talk about this, you got to ask the 2 tough questions. So this is another one of my most favorite things, so you can save time. This is the ultimate time saver. You make it very simple. When you conclude a meeting with an allocator, you have to be able to ask the 2 tough questions. One, hey, we had a really great meeting, went back and forth. Is this an area where our product fit within your asset allocation models, our type of strategy? If they say no, then you know what the follow-up is. If they say yes, then you say, first off, if it's a long-only strategy, you'll say, will you be doing a search in the next 12 months? If they say yes, you know what the follow-up is, right? Then it's like, what components do you have to put into place to better inform them of your strategy? Or second, if they say no, you know what the follow-up is. If you have a private fund and you can say, well, do you anticipate doing a close on September 30th, 2024? Can you get to our final close? Because that's our final close. If they say yes, you know what the follow-up is. If they say no, you know what the follow-up is. So as we conclude, sort of back to the beginning, Dan, number one, cold outreach is everything. Okay, I promise you, if an emerging manager, cold outreach is your best friend. Number two, anecdotally, there is money in motion.
Correct. Yeah.
But it's a hard job. Then three, you just got to get out and be scheduling your meetings.
Yeah.
So with that,
Well, in the family office, right, channel in particular, just get into those conversations. You don't know where it's going to lead. You don't know what introduction could be made after that one conversation, and then how that can create additional conversations, additional activity. And that is what is required to get into any channel, to open up the family offices. Just get started. We say get into the flow of conversations, and good things will happen.
Yep. So family offices are a great channel for emerging managers. Use city scheduling. Pick your 5 cities. You're scheduling for 5 meetings each day using Dakota Marketplace or your own personal database. It works. So with that, Dan, thanks so much for joining us for another episode of the Emerging Manager Growth Show.
Always a pleasure.
Enjoyed it.
Thanks, B, for having me.
Yeah, and our next episode will be on May 14th at 1 o'clock. We'll see you then.
Thank you.
Hello, everyone. Just wanted to say thanks for watching. Hope you enjoyed the show. One thing that I think you do know is all of this information that we covered exists in Dakota Marketplace, our institutional investor database. Even this show that we just cut will end up in Dakota Marketplace so you can view it. And if you're not a member, we would love to show you the platform. Just simply go to our website and get a free trial of Dakota Marketplace.